Hey guys, Jeff with Simply Derivative, and in this video I wanted to show you one of our favorite trading setups that we look for. We actually took it today, earlier this morning, and it is a gap fill play here in the futures market. And you could apply the same principles to not only stocks but also options as well. But we mainly trade and day trade, swing trade futures here, and so this is one of our favorite plays that we look for, and we actually took it today and made some money on it as well. And so let's just get right into it and take a look and see what we look for, what the setup is, and then how we take advantage of it. Let's go to the big picture first. Big picture, you can see that we've had a strong rally from yesterday up out of this basing area, 2980, 2970. All-time highs, not too far off. And so we had a nice strong move up yesterday, clearing this supply or sellers in here in a strong fashion. This move today initially started overnight. This move up from 3,000. We tagged 3,000 yesterday, and then overnight we continue to push up, and you can see that we hit 3,020. And this overnight level, this overnight high is exactly 3,020, and the overnight low is 3,001 quarter. Okay, so we have a strong market. That's what we're looking for, number one. We see that at the time of the regular trading hours, the stock market open, price was above the previous day high. Price was also above the previous close and the open for this particular candle on the daily here in the micro ES. Again, this applies to the ES as well. We just happen to take this in the micros with a bunch of our members. And so for you that have smaller account sizes, trading the micros is a great way to get involved in the futures markets. You don't need a lot. I think it's like $650, $700 per contract in buying power, and even less on the day trading rate, depending on your broker. So the micros are definitely a great way, especially if you're a newer trader and you want to get involved in the futures markets. It's 1/10 the size of the normal ES. So anyways, strong market. We always go through our prep to understand what type of market environment we're in. And you can see that, like I said, we had a nice move up above 3,000 with a close above it. And this candle started the day during the regular trading hours strong. So we gapped up outside of the previous day's range. 3,450 was yesterday's high. 3,250 was the open for this candle, this daily candle, and 3,002 was the close from yesterday. So when price gaps up and then pulls back, that's the opportunity that we're looking for. We were looking for a gap fill, long opportunity based on a strong market environment. Prices were above this area when regular trading hours began. We had a gap fill down below at 3,002 down to 29.99 quarter. Prices opened up, sold off, came back down, actually ticked one tick lower than the overnight high. And that's where our order was, 3,001 quarter, right at the overnight low. Prices came back down, filled the gap, and then you can see what happened. We rallied up. And yeah, it definitely came back down. We've had some bigger price swings today, news-driven, tweet-driven, China-related as well. So we are having some decent volatility in the market, realized volatility in the market, which is a good thing because that creates opportunities for us. And so again, let's go through the setup. Strong move up out of an area where we consolidated. We tagged 3,000, closed above this big round number, this psychological big round number of 3,000. Current market price at the time that the regular trading hours was started, we had gapped up above these price points. And so in a strong market environment, one of two things is going to happen. You're either going to have a gap and go where the market gaps up like it did here and then continues to rally up. The alternative, and that's the play that we took today, is the market gaps up, pulls back, and then it makes its move up. And that's what we looked for today. We were looking for this gap fill. Why were we looking for the gap fill? Well, you can see in this first 5 minutes, this is a 5-minute chart, the market opened up strong, and then we got a little weakness coming in. We didn't get a close above the first 5 minutes worth of trading. So if that's the case, and we have a nice red candle here, you can see that we closed lower than the first 5 minutes on this third candle right here. So if we're closing below the first 5 minutes, clearly this is not a gap and go. So we wait for prices to come back down to our area that we identified as a spot that we'd want to get long. Okay? Strong market environment. We have a gap up, waiting for a pullback to our area. Now, a couple things also added to our conviction in this trade, if you will. Not only do we have a pullback below the previous day high, below the open of this candle for the daily, and the previous close, we also have the overnight low that comes into play. This line here, this dotted purple line, 3001 quarter, and that's where our entry was. You can see that the market had a strong move up from this level, basically a 20-point rally from this level, right in here. It tested it once in the overnight and rallied up. Right here, you can see that. Rallied up, and then once the market opened, we sold off, we came back down into this area. We put our order at 3001 quarter, right at the Globex low, to make sure we get filled and we don't miss the opportunity. You could have put it at 3,250 and take the whole area. We wanted to be a little more precise and limit our risk a little bit, and so we were able to put our order at the Globex low, or the overnight low, for a long, and then we had our targets stated above. Now we always scale out of our trades, no matter what trade it is, no matter what size we're doing. We always want to have a systematic way of scaling out because we don't know how far the market is going to go in our favor. Our third target was 1150, 11 quarter. But you can see the market ran all the way back up to 20 and actually took out the Globex high and then reversed. And why did this happen? Well, some news came out, and you can't really anticipate that, especially in this administration, in these times. We had the trade war going on, and at any moment something can come out, and that's exactly what happened. So we don't anticipate that happening, but we still have our systematic way of taking profits. Because, again, we don't know how far the market is going to move in our favor. When it does, we want to make sure we're paying ourselves. So you always want to have a systematic way of doing this. And for us, we have our stop below. Target 1 is usually a 1-to-1. Target 2 is a 2-to-1. Target 3 is over a 3 or 4-to-1 risk to reward ratio. And this is one of our favorite setups that we look for and we take. When you have a gap in the futures market, it's a great opportunity and something definitely to pay attention to. And when all of these factors come together, that's the setup that creates a great opportunity. And that's what we saw today. It actually worked out twice. You can see the market after tagging the overnight high and coming back down, we came down and traded back at the gap fill again and actually hit 3001 quarter again and then popped up. But we only participated in this particular trade because it hit our targets and we got out in this particular price move up. But that's the setup for us. Strong market environment, above previous close, above the open, above yesterday's high. Market gaps up higher, not getting a gap and go. We're getting a fade the gap, wait for it to close, and then we get a rally up. And that's our play. That's what we looked for. You throw in the Globex or the overnight highs and lows, and that adds to the conviction of our trade. Hopefully this was helpful for you guys. This is one of our favorite plays that we look for. It's very simple. It's not complicated. You just got to make sure you know what you're looking for and get the right market conditions to put on this type of opportunity. We didn't know that this was going to happen, obviously today, but you have an idea of, when you look at the bigger picture, what type of plays are available or possible for you on that day in that market environment. So one more time, let's just repeat what we were looking for in this particular setup. We have a strong move up yesterday. Prices go above and close above big psychological round number of 3,000. We rally up overnight. Strong move out of this area above 3,000. Gap fill close for a long opportunity. You have the confluence of multiple time frames. You have a 5-minute. You have it on the 15-minute as well, plus the hourly, plus the daily. So you have the confluence that we look for in the multiple time frames. You have a test below the Globex low to shake everybody out, stop people out. Add the gap fill. That's our trading setup that we were talking about today that we look for. And again, you can do this in the ES, you can do this in stocks, you can use options to do the same thing. But this is one of our favorite plays that we look for. Like I said, I hope this was helpful for you. Definitely you can incorporate this in your trading strategy, trading plan. Doesn't have to be just with futures. Obviously, we trade futures specifically, and that's our main trading vehicle during the day, specifically in the mornings for the first couple hours. That's the best time to trade futures. But you can also do this with stocks and options as well, like I said. But hopefully you guys found this video helpful. Make sure you hit the like button, subscribe button, follow us on social media. If you want to learn more on how to trade futures, how to read the charts and understand what the market is telling you, what is the likeliest probability of something happening, then check us out at simplyderivative.com. We're trading live each and every day in the markets. We have our trading room. We have our trading course. Guys, if you need help trading, if you're getting stopped out, if you're not finding the right areas to buy, if you don't know what setups to look for, what is reliable, definitely head on over, check us out. I'm going to be doing more videos like this going forward, where we take specific plays, we review them, we go over them, give you all the criteria that we look for, and then show you the results. We made a little money today. Nice trade setup here on the micros. So if you did this on the big boy ES, the mini instead of the micro, you're looking at over 500 bucks. In about, let's see, this is a 5-minute chart. This move up was the one that took it out. The final target, 715 from 655. So we're in the market for 20 minutes, 20, 30 minutes, and you're making 500 bucks off a quick little day trade. So that's it. Hopefully you guys enjoyed this, found this useful. Like I said, if you need help understanding and reading the markets, using price action and technical analysis, check us out at simplyderivative.com. This is Jeff with Simply Derivative. Have a great day. We'll see you next time.